Hello and welcome to MoVeConversations. This is your host Venkat. In this episode, we talk to Mr. Guru Prasad Rao Pandit. My co-producer Mrigank and I know Guru for many years now. He's a fellow IIFTian and the current president of the IIFT Alumni Association in Singapore. He's a veteran grains trader and currently the managing director of Invivo Trading Asia Private Limited. We are happy to announce that MoVeConversations is starting a new series called MoVeConversations TradeStuff. In this new channel, within the MoVeConversations, we talk to international traders as well as people from other professions who enable international trade in various ways. This will include IIFT alumni as well as others. Who better to kick off this series than our president of the Alumni Association, Mr. Guru Prasad. So Guru, welcome to MoVeConversations TradeStuff.
Thank you.
So without further delay, let's begin with the start of the journey of your career in this business. How did you get started in grain business?
More by accident than by design.
Okay.
At that point in time when we graduated from IIFT with an MBA in international business, and obviously we were looking for opportunities. Opportunities those days were very different than opportunities today.
Absolutely.
Yeah, and so it was just, I started my career really not in the grains business, but actually doing something very different as a management trainee in those days, Tata Exports, today Tata International.
True.
And then somewhere down the road, an opportunity came up through contacts for a trading company in Bangkok, Thailand, a global company, but that was purely entrepreneurial. And that's where I started, really. So I started from zero, trying to understand the business, just as any newcomer would. And I was fortunate to have some very good managers and exposure, hands-on exposure, and that probably accelerated the learning curve.
Okay.
And then I moved to Singapore in mid-90s, again with the same company. I spent, and since then I've been in the grains business. So it's nearly 25, 26 years in the business. And then my career progressed with stints in Singapore, a short stint in UK, in London, then back here in Singapore at the turn of the millennium. Working with, by that time I had moved on to multinational companies, a Dutch-based company, then an Asian-based company that got acquired by the Chinese government later on. So about 3 years for the Chinese government, doing essentially the same things. And during that period, you tend to acquire specializations based on your So I started to specialize either in you can specialize in two areas. You can specialize in products or you can specialize in geographies. And my exposure and experience took me through being focused more on geographies, so Asia and the Middle East. And that's what I still do today.
But you still do some of the, you have some focus on certain major grains which you have, acquired expertise over the years, right?
That's correct. My involvement principally, our business is highly specialized. It's big in size, but it's very specialized and very specific. The world knows of grains in a very loose sense of the term, but grains encompasses a much bigger, a wider spectrum of all cereal productions of different grains. So you have wheat, you have corn, you have rice, you have minor coarse grains, millets, with different scales of production. And within that, my specialization is in an area of feed grains, which principally are corn, and all raw materials that end up in the animal feed industry. So these are all intermediate products in the food chain that goes through the meat industry and then ends up as part of the human food chain.
So for the first timers, feed grains are basically those that are used as animal feed, correct?
Correct. That's true. But then there's a very big overlap between feed and food grains.
Right.
The distinction is food grains is what is directly consumed in the human food chain, rice, for instance.
Right.
And feed
Absolutely.
grains is an intermediate stage where it goes through the meat industry and ends up in the food chain. Wheat is another food grain, but it also has the lower qualities of wheat also is used in feed production. So, and simplistically put, what is the feed industry? The feed industry is where just as we humans need a balanced diet, we need carbohydrates for energy, we need proteins for muscle synthesis, you need vitamins, amino acids, and fats. Similarly, animals also need the same sources of food. So the carbohydrates typically tends to come from corn and wheat. The protein comes from vegetable extractions of oil seeds, such as soybeans, and the extraction, which is protein rich, soybean meal. Likewise, you could extend that analogy to any oil seed, canola or sunflower seed.
Groundnut and so on, right?
Exactly. But soybeans and canola are the two dominant oil seeds purely because of the scale, the size. And then there are, they have vitamins, amino acids, and other food additives. So all of them put together gets made into feed, which is essentially a pre-prepared, balanced mix of carbs, proteins, amino acids, and fats, which are fed to animals.
Right. So which are the major nations, which are the major growers, which are the major exporters, which are the major importers when you talk about these feed grains or grains in general?
Okay. There's two things we need to differentiate. One is production and one is trade.
Right.
When you talk of productions, you will typically, the countries that produce more are ones that have arable land, excess arable land. So land mass is one important criteria. And not just land in terms of size, but land in terms of arability.
Correct.
Where you can actually grow crops. So the big producers would be USA, South America, specifically Brazil, Uruguay, Argentina,
right,
Europe, the Black Sea region, Eastern Europe, Australia for certain specific products,
right,
China, and India, of course.
Right.
But then when you look at, well, this is just production. When you look at trade, it's very different. The factors that define what gets exported from where and what gets imported into which part of the world
right,
is a function of population density and arable land.
Because of domestic, you're leading towards domestic consumption. Is that correct?
Well, for the ingredients are the following. So land mass that have low population will always end up with exportable surpluses.
Correct, correct.
So
absolutely.
By that definition, South America, the US, Black Sea. There are countries that have, or regions that have a large and dense population base, limited land size, and not very arable land in terms of size. So by definition, the Middle East, Southeast Asia, parts of Africa, these are the net consuming nations. So these two factors automatically determine what is the trade flow. Where does product move from which country to which country? Then you have certain countries that are, or regions again, that are big producers, but also big consumers, like Europe, like India, like China, wherein most of the trade is internal. So a lot of what gets produced within these countries gets consumed within the country.
True.
India is a classic example, one of the biggest producers of rice and wheat in the world, but not a participant in the world trade. to the extent that other countries are.
Correct. So we talked about the producing countries, but one of the things that we know is that, for all these commodities, price is the first thing that comes to the top of our mind. So what factors influence price in grain business or in, agri commodities in general, but more specifically, let's keep to your specialization, the grain business.
Commodities in general are generic in nature. So you're absolutely right that the principal factor that ultimately it boils down to is the price.
Right.
Quality does have an influence, but it is less of an influence than the price. I mean, that's the very definition of a generic commodity, and it's not a product.
Yes. Yes. It's not a branded product, right?
Exactly. There's no, unless you go into wheat flour production that ends up as a brand on the supermarket shelf, or vegetable oil that ends up in cooking. So we're not talking, we're talking the segment of the industry that is an intermediate raw material in the production of an end product.
Right.
So the price influences, well, the biggest one is how much is produced and how much is consumed, what we call the supply and demand balance sheet.
Economics 101, right?
Yes. So a country, so if you have a large production, you have favorable growing conditions, you have extra acreage for that particular year. And if you have a demand that is steady or growing at a steady pace, and that balance ratio determines price on a longer term scale. Correct. So you're talking year to year prices. Whereas within that, there can be different factors that influence price on a short-term scale. For instance, you could have a logistics, disruptions in logistics that create imbalance in prices from region to region or from origin to origin. And then you have certain, maybe, some countries for their own reasons adopt protectionist policies, restriction of imports, tariff rate quotas, systems. That creates, and again, an imbalance, and that has a relationship with the price. It's an influencing factor on price. Certain origins, for political reasons, may not be liked. So that creates a price spread between multiple origins and changes the nature of flows. Okay. So all these are short-term impacts, but the longer-term impact is purely S&D, balance sheets, as well as a product like corn, a commodity like corn, also has alternate uses. It is used partly in energy, as about a decade ago, there's been
ethanol production, right, in Brazil and
exactly in ethanol. So today, for instance, 1/3 of the U.S. corn production goes into the ethanol industry, into biodiesel and ethanol. Correct. So these are factors. I think the biggest factor that we've seen is really, so these are what we call fundamental factors that are determined by supply and demand. Then we have the influence of managed money, what we call managed money, or the velocity of money in markets. A lot of the business is, there are commodity exchanges, the biggest being the Chicago Mercantile Exchange, what used to be known as the Chicago Board of Trade. Correct. And that is the biggest paper exchange in the world in our business. True. And then you have European exchanges, the Matif, you have Dalian in China, you have the NCDEX in India, and you have different exchanges. But by and large, the world is focused, and what drives the world trade is Chicago CME prices there. And being a paper market, it tends to attract a lot of managed money. By managed money, we mean hedge funds, we mean index funds, the financial players essentially. And why does it attract money? The commodities also over the years has become another asset class in the portfolio of managed money. So when there's a tweaking of different ratios that the financial industry invests in across different industries, and because of the sheer size and the velocity of money flow, it tends to create a lot of volatility in prices.
Right.
And the sheer size can impact also in direction that can be different from what the fundamentals dictate. So the fundamentals could be telling you that prices need to remain steady or at equilibrium. Whereas in the portfolio allocations of index funds, for instance, can cause the market to move wildly. And so I think that's what has become challenging over the years. So not only do you have to keep an eye on fundamentals, but you also have to keep an eye on the money flow, the managed money.
So let me see whether I can simplify for some of the listeners about the money flow. So what you're saying is that there are people who treat these investments, they firstly treat these as investments and as a certain asset class, and they would invest for the purpose, for a shorter period of time, most likely, for the purpose of making gains in the market.
That's correct.
Right. So which non-players, not people often from the trade, international trade would call it speculation, right? Is that because they don't have a real interest like a grain processor would have, correct?
That's true.
So this is exactly where when we're talking about those people, right? Of course, others, grain processors also hedge, and we'll talk about that later. They also take a position and so on, because it is also a part of their interest. But this group of people you're talking about are, which you say you have to watch, and all traders have to watch, is like these people are putting money in and in a particular direction. So this is the direction in which the prices may go, which may have nothing to do with the fundamentals of the supply demand position in real terms.
That's true.
Correct?
Though I would think that I think I would hesitate to use the word speculator because that has a very negative connotation. Whereas I think the more appropriate word is probably risk takers. In business, there is or anything in life, in our personal investments, there's no risk without reward, or there's no reward without risk, and vice versa. So you have to, a lot of these funds or managed money put, there's cutting edge research and data analytics that goes into a decision-making process. So it's nothing is done, just because I wake up one day and I think that this is going to go up or this is going to go down, and therefore I make my investment decision. So I think it's a question of risk. How much risk do you put on the table, and what kind of returns do you expect? Now, a lot of them do expect what we call an asymmetrical risk-reward profile. So for every unit of risk, you probably expect 2 or 3 times the reward. And that's how the whole risk management process, that's how they operate.
So this is leverage, right? So is that correct?
Well, it's not. It's expectation of an abnormal reward for a certain risk that is assumed.
Right.
And then you live and die by the end result.
Okay.
So
good, and we will come back to risk management again,
Sure.
later in our discussions, and especially from the perspectives of the processors, right?